See, when you're comparing onshore to offshore, I think today's rate environment in the dollar market, onshore wins hands down in terms of pricing. Where onshore does not really stand up and measure up is quantum and tenor. Onshore markets, beyond 5 years, it is not a very liquid market. And the second one is really in terms of quantum, 250 million dollars. It's counted as a
So,
large issue.
notwithstanding how rapidly the market has grown, it's just not good enough for a conglomerate like yourself. It's just too small, the
No, it's
tenor
not a
too
question
short.
of. See, it's also a response. See, the way we have to look at it is that this problem does not exist in China or Russia. Right? Russia has gone through. Let's take the example of China, Russia. Geopolitics will happen the moment you start to stand up in the room and you say that I want a seat at the table. You will be get pushed back. You will get short sellers writing report on you. You will have people doing lots of random stuff. But that is just par for course. That will happen. How do you counter that? You have to follow what China has done, what Russia has done. You have to then put an Indian masala to it. But broadly, we need to have local markets which are solving without taking additional risk, which are solving your capital needs, and cost being higher or lower is a more short-term phenomenon. It's more about actually getting the right credit structure. The market is on the right track. I think insurance companies will play a much bigger role than mutual funds. Mutual funds are playing with volume, but they are the guys who are on the shorter end of the curve. Insurance companies can really do the longer end of the curve. They will have to play a much more important role. The lazy, easy thing to do is to do government bonds, followed by a few state government bonds or municipal bonds. And then there are a few names where you can do easily, which are well established in the market. They've been tapping the market for long. Headline risk is low. The tougher thing to do is to actually stand out and say, let me do a structured product. Let me do a AAA rated, but let me do a 15-year issuance, 20-year issuance. I take care of everything. Take this out of your head that, you know what, I want to structure this trade with puts and calls, all of these sort of things, which basically mean it's not a 20-year instrument anymore, it's a 5-year instrument or a 3-year instrument. So from that standpoint, I think it's our responsibility as an issuer, and especially somebody who's going to be playing in infra. We don't play in oil. Oil is a big factor of geopolitics. Capital is another big factor of geopolitics. It's a product of geopolitics. And in capital, when you play infrastructure, you have to ensure that you have uh, you have enough capital available in your home ground in onshore markets to be able to continue to meet your growth targets regardless of what geopolitical tailwinds, headwinds, etc., all of that come. So to that extent, we don't think that domestic markets should be ignored and we'll just do the larger billion-dollar trades offshore. We don't think that at all. In fact, what we think is that the more we can enable and ensure that we get one, the onshore markets more comfortable on us. Second, we get the onshore markets to do more tenor with us, and you know, then pricing etc. things which we'll take care of later. But the structure is there, volume is there, everybody benefits. More importantly, we will also benefit from that. So that's the way we think about it.